Hi friends, myself Subrata Mukherjee and you are watching my channel Dr. Subrata Mukherjee Distance Learning in Commerce. Today I am going to discuss a problem on amalgamation of companies. This is lecture number 1 on the topic and you can see the other lectures on accounts, costing, financial management and management accounting in the playlist section of the channel. I would like to request all the students to please note the question in your notebook and then you see the solution and note down the solution in your notebook. If you find any difficulty in understanding, feel free to communicate with me through email and the contact number given in the description box. X Limited and Y Limited agreed to amalgamation. A new company, XY Limited, was formed to take over the assets and liabilities of X and Y Limited at the date of balance sheets shown below. So shareholders fund, we have share capital of 50,000 and 20,000 of the two companies, X Limited and Y Limited. Then we have the reserves and surplus of 9,850 and minus 2,500. It means we have a loss in the books of Y Limited. Then current liabilities. So there is a short-term borrowings or bank overdraft in case of Y Limited for rupees 1,000 and trade payables of X Limited is 5,000 and that of Y Limited is 3,000. So total of liabilities of X and Y are respectively 64,850 and 21,500. Now coming to the asset side. So we have first the non-current asset, and under non-current asset we have fixed assets for freehold premises 38,000 for X Limited and 15,000 for Y Limited. We have goodwill of Y Limited for rupees 3,000. Then we have the current assets. Under current assets, the first is the inventories. So inventories of X Limited is 15,000 and that of Y Limited is 2,000. Then trade receivables 7,000 and 1,500. And we have a cash at bank in case of X Limited 4,850. So total of asset is also 64,850 and 21,500. Now notes to accounts. So share capital issued and subscribed and fully paid equity shares of rupees 1 each. So number of shares of X Limited is 50,000 and number of shares of Y Limited is 20,000. And each shares has been valued at rupee 1, that is the face value. So the share capital of X and Y are 50,000 and 20,000. In case of general reserve, we have 7,000 of X Limited and the PL account is 2,850. And we have a loss in case of Y Limited for 2,500. For the purpose of amalgamation, goodwill of X Limited was agreed at rupees 5,000 and that of Y Limited was considered valueless. Freehold premises were revalued at the following amount. X Limited rupees 45,000, Y Limited rupees 17,000. The stock of Y Limited was reduced by obsolete items amounting to rupees 425 and it was agreed that 5% be allowed for doubtful debts in respect of both the companies. The purchase price of X Limited and Y Limited was discharged by the issue of XY Limited of rupee 1 share valued at rupees 1.25. You are required to submit your workings showing how many shares in XY Limited would be received by the holder of 1,000 shares of X Limited and the holder of 100 shares of Y Limited. And in point B, we have to draft the balance sheet of the new company XY Limited as it would appear on completion of the amalgamation. So let us start. So first of all, we need to calculate the purchase consideration. So I am writing here calculation of purchase consideration. So X Limited, and here I have written Y Limited. So first of all, we have to write what are the value of fixed asset of X and Y Limited that was been taken over by XY Limited. So I am writing here freehold premises, $45,000. So these are the revalued figure. In the adjustment in questions, it is clearly written that the value of freehold premises of X Limited will be valued at 45,000 and that of Y Limited will be valued at 17,000. Next, the goodwill. So value of goodwill, the book value was nil in case of X Limited, but it has been revalued at 5,000, and the book value of Y Limited was 3,000, but it has been considered as valueless at the time of amalgamation. Next is the inventories. So inventory of X Limited was taken at a book value, and there was a revaluation in case of Y Limited, and I am writing here 1575. So in question you can see that the value of inventory was 2,000, but there was an obsolete item of 425. So 2,000 minus 425 is 1,575. Next is the trade receivables. So you have to make a provision of 5% in both the companies. So after provision of 5%, you will get a figure of 6,650. So in question you can see that trade receivable was 7,000. So 7,000 into 95%, you will get 6,650. So if you multiply 7,000 with 95%, you will get this figure in case of X Limited. And in case of Y Limited, you need to multiply 1,500, multiply it with 95%. So if you multiply 1,500 into 95%, because there is a provision that has to be made for 5%. So you will get a figure of 1,425 in case of Y Limited. And cash at bank of X Limited is 4,850. So if you add up the figures of X Limited, you will get a total of 76,500, and in case of Y Limited, it will be 20,000. Now from total of asset, we are going to reduce the amount of liabilities, that is bank OD. In case of X Limited, there was a nil, but in case of Y Limited, we have a bank overdraft of 1,000 rupees, and the trade payable, that is sundry creditor of X Limited is 5,000 and that of Y Limited is 3,000. So total of liability in case of X Limited is 5,000 and that of Y Limited is 4,000. So the amount of purchase consideration, so here I am writing purchase consideration in case of X Limited is 71,500 and that of Y Limited is 16,000. It means that XY Limited is going to be formed and X Limited will be paid for rupees 71,500 and Y Limited will be paid for rupees 16,000. Now this amount will be discharged through issuing equity share of XY Limited. So how many number of shares to be issued of XY Limited? So I am writing here, this is the question that has been asked. Number of shares to be allotted by XY Limited. So amount to be discharged is 71,500 to X Limited, and the value of one share of XY Limited has been taken at 1 rupees 25 paisa. So 57,200 number of shares. It means 57,200 share will be issued to X Limited and to Y Limited, rupees 16,000 divided by 1 rupee 25 paise. So 12,800 shares. So number of shares to be allotted by XY Limited is 57,200 to X Limited and 12,800 to Y Limited. Now, question number A, point number 1, that is number of shares received by the holders of 100 shares of X Limited. So 57,200 shares has been allotted to 50,000 shares. So 1,000 for every 1,000 shares. So number of shares that will be allotted is 1,144. So this is basically unitary method that I have adopted here. So 57,200 number of shares will be distributed among 50,000 shareholders. If you consider that each shareholder is having only one share, it means 57,200 shares of XY Limited will be allotted to 50,000 shares of X Limited. So if you consider a person who is holding 1,000 share, how many number of shares he is going to get? Then 1,144 is the number of shares of XY Limited will be distributed for every 1,000 shares of X Limited. And in point number 2, number of shares received by the holders of 100 shares of Y Limited. So 12,800 shares has been issued to 20,000 shares. So for 100 share, 64 number of shares will be allotted of XY Limited. So this is the first answer, 1144 and 64. And now we have to draft the balance sheet of XY Limited. So here I am preparing or drafting the balance sheet. Balance sheet of XY Limited as at, because the date of balance sheet is not given in the question, so I have written just dot dot. So on the top I have to write the liabilities, and under liabilities we have equity share capital of rupees 70,000, and then the securities premium. So equity share capital, the face value is rupee 1. So 70,000 shares, if you multiply rupee 1, you will get a total equity capital of 70,000, and the value of one share is taken at 1.25. So 0.25 is the amount of premium. So if you multiply 0.25 with 70,000, you will get a figure of 17,500. So equity share capital is 70,000 and securities premium is 17,500. Then the current liabilities. So under current liability we have, so I can write here as current liability and under current liability we have a trade payable which were taken over by XY Limited for the two companies are 8,000. 5,000 plus 3,000 is 8,000. So you can see in the table of purchase consideration, if you add up these two figures, 5,000 and 3,000, you will get a total of 8,000. So I have written here trade payable 8,000 and bank overdraft of rupees 1,000. So total of liabilities is 96,500. And under assets we will write, the first is the freehold premises, and the amount of freehold premises is 62,000. 45,000 is the value of X Limited, and 17,000 is the value of freehold premises of Y Limited. So total is 62,000. Then goodwill of X Limited was taken at 5,000. Then inventories, we have current assets. So these are fixed assets. I can write here fixed assets. Under asset, we have the fixed asset for freehold premises and goodwill. And then I will write the current assets. Current assets. And under current assets, we have inventories. So inventories of X and Y has been taken at 15,000 plus 1,575. So this is 16,575. Then trade receivable. So trade receivable is 6,650 plus 1,425. If you add up these two figures, you will get 8,075. And cash at bank of X Limited is 4,850. So if you add up the figures of assets, you will get a total of 96,500. So I expect all the students have recorded the question with solution in your notebook. In spite of this, if you find any difficulty in understanding, feel free to communicate with me through email and the contact number given in the description box. Thank you. Thanks for watching the lecture.